Good morning, everybody. It's Wednesday, August 20th, 5:23 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 1 3/4 at 401.5. November soybeans down half a cent at 10.33 1/4. December Chicago wheat up half a cent at 5.21 3/4. December Kansas City wheat down 2 at 5.19 3/4. December spring wheat up 1.5 at 5.89 last trade. We've got some news regarding soybeans, the president, and China. Why don't we start there?
So the American Soybean Association is urging President Trump to secure a trade agreement with China. Earlier this week, the association's president sent a letter to Trump explaining soybean farmers' financial challenges and warning that they are on the brink of a crisis if the trade war with China continues. China has yet to purchase any new crop soybeans, leaving export sales for the upcoming season at their second lowest level in a decade. China typically buys about 14% of its U.S. soybean needs for the new marketing year in August before harvest begins. The association cautioned that if China continues to avoid U.S. beans, other countries will not be able to offset the lost demand.
Yes, Chinese purchases of new crop U.S. soybeans are non-existent. They don't have a single bushel on the books. And therefore, the total book of new crop soybean export sales is very poor. In any given year, China would account for ballpark 20% of all demand for U.S. soybeans. So this is a big deal, of course. Part of me looks at this and says, tariffs don't add or subtract bushels from the global balance sheets. And that's what really matters at the end of the day. But the fact that China has not bought U.S. beans has absolutely resulted in a very poor book of export sales. Could other countries ultimately come in and fill the gap if China decides to buy nothing? I suppose that's possible. My opinion at this point still is that China will come to the table and buy new crop U.S. soybeans in some amount, maybe a reduced amount. And maybe some of that has to do with the tariffs. Maybe some of it has to do with larger crops in Brazil. I'm told that U.S. soybeans would be competitive for the new crop time slot versus Brazil. But the tariffs, which of course China charges its importers, have rendered U.S. soybeans non-competitive. China could waive those tariffs if they really needed the beans from the U.S., but they have not done that to this point. I have not been made aware of that. Here's a letter, and I'll read you a couple of sentences. Soybean farmers are under extreme financial stress. Prices continue to drop, and at the same time, our farmers are paying significantly more for inputs and equipment. U.S. soybean farmers cannot survive a prolonged trade dispute with our largest customer. And to be clear, China is our largest customer on the export market. The largest customer of the U.S. soybean grower is now the domestic processor, who will account for 58% of all demand for U.S. soybeans during the new crop marketing. So your largest customer, the largest buyer of U.S. soybeans overall, is the processor in the United States, but your largest customer on the export market would be China, of course, typically. Then maybe they won't be this year. I think they will be. I think they will be ultimately. So moving forward here, the market's going to watch this. Part of me thinks like now we've got the lobbies, talking to Trump, and there's going to be more back and forth. This all leads me to the conclusion again that the government's going to have to write the farmer another big check here sometime later this year. It's certainly possible that soybean prices come back to production cost this year, but it appears unlikely at this point. You'd have to get new crop soybean futures probably back up close to $12 to get something that resembles break even for most soybean growers. And everybody's a little bit different, of course, but that's kind of a ballpark number. So we are very, very far below production costs. You're not really to a point yet where crop insurance is going to do the soybean grower any favor. So yeah, we are in dire straits here, certainly.
The Pro Farmer Crop Tour released its Indiana and Nebraska corn and soybean crop findings yesterday. In Indiana, corn yields were estimated at 193.8 bushels per acre, edging past the previous tour record of 193.5 set back in 2021. The estimate is 3.3% above last year and 6.4% higher than the tour's 3-year average. Soybean pod counts in the state were 2.3% lower than last year, but 6.3% above the 3-year average. In Nebraska, corn yields were pegged at 179.5 bushels per acre, the highest in 4 years. The estimate is up 3.6% from last year and 7.9% above the 3-year average. Soybean pod counts were up a whopping 15% from last year, marking a new tour record.
The way that I like to do this is measure tour versus tour this year versus last year, and then USDA versus USDA this year versus last year. So let's start off with corn in Indiana. The crop tour estimated that Indiana's corn yield would rise by 6.3 bushels per acre or 3.35% versus last year, tour versus tour. Meanwhile, USDA has projected that the state's corn yield would rise by 7 bushels per acre or 3.5%. So the year over year increases on a percentage basis, tour versus tour and USDA versus USDA, are very, very similar. So essentially, in my view, the tour has indicated that Indiana's crop is probably a record or has that potential and is as good as the government has advertised. There are other ways you can do this. That's the way that I like to do it. The scouts in Indiana noted some disease pressure, but crop potential appears very, very strong. When you go to corn in Nebraska, the tour estimated that the Nebraska corn yield would rise by 6.3 bushels per acre or 3.6% versus last year. That's tour versus tour. USDA's got the state's corn yield up 4 bushels per acre or 2.1%. That's USDA versus USDA. So I suppose with Nebraska corn, you could infer that USDA could be close to reality in its year-over-year increase, and therefore the crop estimate for the state. Scouts noted strong potential in Nebraska, especially because there was a lot of rain in dryland corn areas this year. In a lot of years, that's not the case, and that really drags the number down. I just don't know that that's going to be the case this year. To go to soybeans in the state of Indiana, scouts found pod counts in Indiana were actually down 2.3% versus last year. That's tour versus tour. Meanwhile, USDA has the number rising by 5.1%. So perhaps some problems with the bean crop in Indiana. I think the two are indicating that maybe the crop isn't quite as good as USDA has advertised. Indiana's turned dry. A lot of it's turned dry. And we're going to talk about that here, I believe, in our next story. In Nebraska, soybean potential was outstanding, 15% above last year. USDA's actually got a decline of almost 1% penciled in. So the two are perhaps indicating drastically better soybean potential than what USDA has advertised. The trend, generally speaking, I think with regard to the tour so far has been that maybe the East is good, but maybe USDA could be a little bit too high, especially with Ohio. And I think the Western Corn Belt stuff, South Dakota and Nebraska, appears to be very, very good. I don't think that the tour or its data has had any impact on the markets whatsoever this week. You look at corn and soybean futures, we've been very much choppy here for the first couple days and into Wednesday morning.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video with Pete Meyer?
Pete's on the crop tour. He's on the eastern leg, which I would argue is probably the more interesting leg. There's been some more weather anomalies out east. They started off with planting delays in Ohio and Indiana, and now they've turned dry. And I think that makes the situation in the east a little bit more interesting than the west. If you guys don't understand how the crop tour works, Pete did a very good job of explaining their methods, what they do, how the process all works. And he gave his 2 cents and thoughts. And Pete's very matter of fact and gave you his honest opinion of the crop and what he's seen so far. We're going to do another kind of live from the crop tour video with Pete on Thursday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel it at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We don't want to call you. We don't want to sell your crop insurance or brokerage or anything like that. We just want to send you our emails and our videos and our text messages every single day. Everything from cash grain marketing to policy to machinery and equipment budgeting to marketing. I mean, everything that affects you guys as the decision maker on your farm is stuff that we cover. So sign up this morning, give that deal a shot. I'll forward you a copy of this morning's email.
Many parts of the U.S. Eastern Corn Belt remain dry. Large areas in the southern half of Illinois, Indiana, and Missouri, along with a big chunk of Ohio, have seen little to no rain over the last 14 days. Temperatures trended well above normal during this same time frame. There is no rain in the forecast during the next 10 days. For most of these areas, even the extended forecast is dry. Farmers in these areas are especially concerned about the development of the soybean crop. 1 or 2 rains this time of year could contribute to a 10 to 20 bushel per acre swing. Corn is also a concern as the grain fill period is ongoing.
Yeah, I think there's some real concern, and a number of farmers, and even Matt Bennett, when he was on last week and did the show with me, said, yeah, if we catch an inch of rain right now, it's a 10, maybe 20 bushel per acre swing in beans. So it's a big deal. You guys are looking at this map from our friends at Crop Profit. Excellent stuff. This is rainfall in inches over the last 14 days. And if you look at the light blue areas in particular, those are areas that saw little to no rain, maybe trace amounts. Here's kind of a zoomed in version of part of Illinois, just so you can see what I'm talking about. It'll say like a tenth for that county, but a lot of areas of that county probably saw nothing. So this could impact the soybeans probably more than the corn. Corn's in the grain fill period. It matters as well. And the fact that the temperatures were so far above normal during these last 2 weeks is of concern. I mean, we were almost 6 degrees above normal for a huge chunk of Illinois and 5 degrees above normal in Indiana and Ohio. Some of this dryness exists in Missouri also, and there's no rain in the forecast, not in the 7-day models. And even if you go out to the 10 or even 14-day maps, there's very little rain there as well. So I could see some issues with soybeans in particular in call it the southern half of Illinois, quite a bit of Indiana, and a huge chunk of Ohio, especially as we move forward here.
The EPA could rule as soon as this week on 195 pending waiver requests from small oil refineries seeking relief from federal biofuel mandates. Exemption requests have piled up in recent years due to court rulings, political pressure, and shifting policies under both the Trump and Biden administrations. A broad approval of these waivers could reduce overall biofuel demand and push renewable identification number RIN prices lower in the months ahead. However, a limited number of approvals would likely strengthen demand and lift RIN values. Analysts anticipate the EPA will grant roughly 20 exemptions annually, equivalent to about 900 million gallons of ethanol.
Small refinery exemptions, SREs as they're called, work like this. A small refinery says to the government, hey, following these rules, this is way too expensive for us. It's going to hurt our business, and therefore we'd like an exemption. And the government says, okay, you're exempt. You don't have to buy RINs and you don't have to blend biofuel. And it results in less demand for corn ethanol and soybean oil and things like that. A small refinery, by definition, in this instance, is defined as a refinery that processes 75,000 barrels of oil per day or less. Here's the problem, and this is why this whole thing is absolute nonsense. A lot of these small refineries are owned by the big oil companies. You could have a, quote, small refinery that's owned by Chevron or Exxon or these large oil refiners, and that's actually the case in most instances. So this has been a way for big oil to kind of game the system, and the government has gone along with it to some extent. And I think that the farm lobbies out there, like the soybean growers are talking about trade deals, them and the national corn growers should be talking about this as well. And they have in the past, but they're going to need to revisit it. Whatever the ruling is, it's going to be challenged in court, and we have not heard the end of it.
Brazil's antitrust regulator has opened an investigation into the soy moratorium. The investigation targets 30 major soybean traders, including Cargill and ADM, as well as 2 industry groups. The moratorium is a voluntary pact under which traders agreed not to purchase soybeans grown on Amazon land deforested after 2008. The antitrust regulator claims the agreement may function as an anti-competitive cartel. Farmers and agribusiness groups contend it imposes trade restrictions that go beyond national law. Following the launch of the investigation, enforcement of the moratorium has been suspended.
So Brazil's antitrust agency, whatever they're called, they're telling these companies in this group, hey, wait a minute, you're not just protecting the forest, you may also be working together to control the market in a way that's unfair. And exactly what that means, I don't know. Like, are they price fixing soybeans? I don't know exactly what the implication is. I think that's the implication to some extent, is that they're working together in such a way that could be considered a cartel or a monopoly or whatever. So I don't know that this goes anywhere. I don't know if this has anything to do with price action, but I thought it was noteworthy this morning. We had a flash sale.
We sure did. A flash sale of soybeans yesterday. U.S. exporters sold 8 million bushels of beans to Mexico for delivery during the 25-26 marketing year. Accumulated soybean sales for the next marketing year are down 20% compared to the same period last year.
Mexico has been a big, beautiful trade partner for the United States with regard to corn and now soybeans, apparently, whereas China has not been recently. What did cattle do yesterday?
Cattle futures were mostly higher. Live cattle were 40 cents lower to $1.30 higher. Feeders saw gains ranging from $1.50 up to $2.80. Box beef prices were higher once again. Choice was up $2.96 at $407.20, and Select was up $2.62 at $379.76.
Outside markets are unexciting this morning. The Dow's off 75 points. The S&P's off 8. Treasuries are mixed. U.S. dollars about flat. Crude oil's up about 60 cents. Have a great day, guys. We'll be back on Thursday.